Hey, what's happening, guys? Dan Darrow here with another Options Play video update. Hope everybody's having a great week. Still a lot of selling pressure. It doesn't seem as though we've exhausted all of this pent-up selling, and just consistent, steady move lower could really be getting towards the capitulation point. But as of right now, as of the time of this video, still really, really heavy. Seen some wild moves, and I've seen some people chalk it up to maybe hedge fund redemption, liquidations, positions blowing out. I mean, the moves in tech, the moves in biotech, the moves in oil, the moves in natty gas, which didn't even talk about. It's just incredible. So there's something going on. There's a lot of money being moved around, and just leading to some really wild moves. So it's been kind of a under the radar, kind of a crazy week, right? Um, so what I want to focus on today in this video is correlation. So I talked about this a few weeks ago, uh, but it's really interesting around earnings season just because of the way options are priced, right? You know, especially companies that have weekly contracts, more specifically. And what I mean by that is that let's take Macy's here, for instance. So Macy's reported this week. They reported this morning, and just having followed this sector for a long time, you come to realize, or I've come to realize, that a lot of names in the same category, even like subcategories. So within retail, within like brick and mortar names, the Macy's, Kohl's, Target, Nordstrom, J.C. Penney's, these stocks really all tend to react together. So whichever one reports, whichever one goes first, you tend to see a move in the entire group just because the numbers don't tend to be very far off from one another. So, when Macy's was on the radar coming this week, you knew that it was going to create opportunities in other names just because they tend to move together. And that's what I mean by correlation. So stocks that are highly correlated will tend to move together. And there's a correlation coefficient. So basically, one is the highest, meaning that the stocks will move perfectly in tandem. So for every uptick, one stock and another stock will have another uptick, right? Or a negative one would be the opposite. So for every $1, one stock moves up, the other stock will move down $1, or percentages, and so on and so forth. So these types of scenarios play out a lot. I mean, Home Depot and Lowe's, that was another one this week, right? I mean, those two are very, very similar names within the retail sector. So when Home Depot reports, then Lowe's is probably going to react to that, right? So I'm always on the hunt for these correlated setups because the options are are really where it gets interesting. So with Macy's reporting, you knew that Kohl's, right, Target, so on and so forth, they're going to move. But Macy's had the catalyst. So the options of Macy's are going to be priced with the earnings catalyst. Kohl's doesn't have the catalyst. So Kohl's is not reporting this week. So next week, the options are going to be priced in an earnings move. This week's options in Kohl's are, yes, they're a little bit more expensive because people know they're going to move, but they're not to the same magnitude as they would be if there was an earnings catalyst. So when you're coming into these plays, it's really worth taking the time to kind of go through it because they don't always work. Obviously, like if Macy's was mixed and did nothing, then odds are that the other stocks, so like the Kohl's, are going to do nothing. But what you can see is that so first off, like last quarter, right? Macy's went into earnings at the high and then gapped down. So let's throw up the comparison of Kohl's here. You can start to see like a lot of these pass the eyeball test, right? Even if you're not really familiar with the sector, you can kind of like eyeball it and see. I'll get to the calculator in a couple minutes, but it's basically just like an eyeball test. You can see that these stocks, I mean, very closely move with each other. Had a big run in May, June, right? Went into earnings, and what happened? Macy's got hit really hard, and what did Kohl's do? It dropped pretty sharply as well, right? Kohl's is the one in the blue. You can see, right? Macy's hit. What did Kohl's do? Dropped. So then over like the last couple of months, I mean, look at this. It's just perfectly in tandem, right? I mean, like tick for tick, these things are moving in tandem. And going into this week, Macy's priced in an earnings move, right? Kohl's didn't. So if you play the options, I mean, if Macy's is going to move, odds are that Kohl's is going to react to it. So that's why I felt that the Kohl's options were an interesting bet. So not only do you get Macy's, but you get Nordstrom, you get Walmart tomorrow morning, you get JCPenney, Dillard. So there's multiple catalysts for Kohl's with highly correlated names. Yet the options are trading at a lower valuation because they themselves, Kohl's, don't have an earnings report this week. So now you're wondering, all right, what else, right? Like what other setups are there? So I know another one that kind of like that another one that I'm sure if you're following the names you're familiar with. AMAT reports this week, right? If you're familiar with AMAT, it's kind of in the semi equipment. I mean, obviously, like the chart has been really, really tough. But if you know the sector, then you know that there's certain names that'll move with this. So what I'll pull up now is LRCX. So if you're not familiar, LRCX, same sector, same like subsector, same category, and you can see like how closely related these two stocks are. I mean, like every peak and trough, I mean, right about the same time when they pop and drop, they tend to move in tandem. So coming into this week, you knew AMAT was reporting, so it's worth kind of like snooping around in the LRCX options because they're not going to be pricing in an earnings move. I mean, they already reported a couple weeks ago. So AMAT, it's not guaranteed it moves, but if it does, odds are Lamb, which moves very closely lockstep with it, is going to move along with it. So the options should be trading at a discount to what you would pay for AMAT. And that's why I'm always on the hunt for these, because there's a lot of opportunities with these contracts. It's like yes, you want to be involved with the catalyst, but even then, like there's still ways to play it where you maybe don't have to lay out the same amount of money. So you want to be an AMAT because you think it's going to be a mover, but even then, I mean, it might be more beneficial to look at Lamb just because of how closely correlated these two stocks are and the differences in the options. So let me pull up. This is the correlation calculator I use. It's free if you want to check it out. Tools of the trade here. For buy upside, it's just called stock correlation coefficient calculator, right? So what I have, you can if you want to check, if something doesn't pass the eyeball test, like what I was saying, like sometimes you can just see how closely related two stocks are. But if you're wondering just how maybe like you're just trying to like figure out if something I'm in is going to move because of something else, right? So this is a really useful tool. So what I'll show you is put in AMAT, right? Lamb number 2. I usually go back about 6 months. It depends on the time frame, but 6 months kind of gives you an idea. Like the performance of the last 6 months, how closely these two stocks move. So AMAT and Lamb over the last so I'm gonna change this over the last 6 months. What do you got? Look at this, 96. So that tells you everything you need to know right there, right? So one is the highest, right? And this is 0.96. So it just shows you that if AMAT's going to move this week, odds are, right? The last 6 months history of trading tells you that there's a very high chance that Lamb is going to react to the number, a 0.96 correlation. So I love these opportunities, I mean, not every setup is great, like sometimes like two stocks would be perfectly correlated, but the setup for the company reporting stinks, right? I mean, what does it matter? I mean, if you don't like the setup, it doesn't matter if one company's options are cheaper, like the setup's just not great in general. But if you're really interested in AMAT, or you're really interested in Macy's, or Home Depot for that matter this week, then it's worth taking the time and looking a little bit deeper to see if there's maybe not a way to trade that number, but having to lay out less money. So, if you're looking at AMAT, well, maybe you take a look at Lamb now, because you can see, I mean, 0.96 correlation. I mean, that tells you that there's a very high relationship between these two stocks. And odds are, if AMAT has a big move, Lam's going to have a big move as well. All right, guys. Still some big names reporting. Walmart tomorrow morning, NVIDIA, AMAT tomorrow night. So, you know, already swinging around a lot this week. But, I mean, with the names reporting, probably set to continue to do that. So, lots to look forward to. Questions, comments? Again, always love to hear from you. Please reach out. Pass it along. I can tailor these videos to what you want to hear. Have a fantastic night, and I'll talk to you guys tomorrow.